So last week, the Fed cut their interest rate by 50 basis points. Mortgage rates didn't really change, but I do think it's going to affect the market. That's what we're going to talk about. I'm Andrew Gavin. I'm a California mortgage lender, and I sell real estate here in San Diego. Okay, so the Fed dropped their rate by 50 basis points, 0.5%. And we didn't see a big movement in mortgage rates. That's because lenders have been preparing for this rate drop for the last 6 weeks, and rates have slowly been dropping almost every couple of days. So when we got to the actual Fed meeting where they announced the drop, the change, all the pricing had already been built into the rates that were being offered. Now, this is a key point to pay attention to because timing the market is very difficult, and a lot of people really do try and do it. They try and time the market to buy at the best price, sell at the best price, and get the best interest rate. And all three are incredibly difficult to do, especially when the main reason that people are doing anything in real estate is something tied to their life. And it creates limitations of time when they actually have the ability to buy or sell real estate. And that's why we see a lot more transactions in the summer, because there is a lot more people with free time in the summer because kids are off school. Now, here's two big benefits for buyers based on this Fed rate cut. One is you can potentially get a lower mortgage rate. You're going to go, whether you're planning to buy or a homeowner and you're going to do a refi, if you can get a lower interest rate, you will have a lower monthly payment. The second thing that is super important, because the maximum that a person can borrow is based on monthly DTI, calculating out a lower mortgage payment leaves more space in that monthly DTI. What that translates to is the ability to buy at a slightly higher price. So with a lower interest rate, if you qualified to buy at $600,000, with a lower mortgage rate, you might be able to qualify at $650,000, buying a slightly different house, maybe larger, maybe in a different neighborhood. But that lower interest rate does open that door for you. Now, for sellers, this is where this gets really interesting, because the lower interest rate that has two big benefits for buyers, which I just spoke about, has a benefit to the seller is that lower interest rate is going to be intriguing to a lot of buyers. This 50 basis point drop, the estimate is over 2 million families can now potentially afford to buy a house that couldn't at 7 or 8%. So what does that mean for a seller? It means potentially more interest in your property, more offers on your property, and more competition from buyers willing to negotiate to get into the home that they want. Could sellers see more competition from other home sellers? I absolutely believe that this rate drop could bring more sellers to the market. Rates have dropped enough that might put more sellers in a situation where making a move to a new home after selling their current one with a new mortgage rate is not going to be as difficult to handle compared to rates in the 8s that we saw 12 to 18 months ago. So we could see more buyers out looking, more sellers coming to market, more competition for the limited number of properties that are listed. And we could see buyers looking at slightly higher prices. And when buyers have more ability to buy, almost all the time, the trend is to buy as much as possible. And most of the time, that's at the highest point of what they qualify for, especially first-time home buyers, first-time move-up buyers. They're generally trying to get into a house that they potentially can barely qualify for. And we see this all the time. So could we see a surge in real estate in general? Absolutely. More buyers, more sellers, better rates. Very similar to what we saw during and at the tail end of COVID, where rates were so low that buyers were very interested in finding a property and getting into a home. Now, home prices, the difficult thing for buyers, home prices could absolutely go up. For sellers, that's probably good. You can potentially get more for your house than you ever have. Even when rates are in the 7s and 8s, here in San Diego, in California, we saw home prices rising much slower than 22 and 21, but we did see homes increase. They always ebb and flow a little bit, but home prices are continuing to rise. In California, that's because we're running out of space to build everywhere. And new construction homes are so far behind that we are always going to be in a limited inventory situation. With California being a destination location, it's only going to get worse. Buying today is always going to be better than buying in 6 to 12 months if you're looking in any major metropolis in California. So, is this a good thing? Does it matter? And will rates drop again? Absolutely, I think it's good for everyone, because even if you as a buyer end up buying a house that's higher priced because prices went up a little bit because of these rates, you're going to pay less interest. You're going to pay more towards the house and pay less interest. So you are benefiting. Is it going to be difficult? I do believe so. I think competition is going to get intense again. Sellers, I think you're going to get some more competition, but inventory is so low that I don't think it's going to matter much. And you're going to be able to benefit by selling your house at a higher price. And we saw a lot of people leaving California. So if you are even considering leaving California, selling a California property at the height of the market pretty much gives you free reign to go anywhere else in the country and buy a much nicer home than the one you just sold at a significantly lower price. If you have more questions about mortgages, refinance, or real estate in San Diego, please hit me up. I'd love to help you.